Charitable giving has always been about making an impact, but what happens when the rules change? Beginning in 2026, new tax laws will reshape how deductions work for donors at every level. So, what does this mean for the future of giving? Whether you contribute a little or a lot, planning ahead is more important now than ever. We're going to break down what's new and what it means for you right now on UBS Trending. Hello, everyone, and thank you for joining me. I'm Anthony Pastore, and this is UBS Trending. And as we prepare for the end of the year, we invited two of my fantastic UBS colleagues, Carrie Larson and Andrea Rothberg, to talk about how you should be thinking about giving as a lot of the rules are changing. So thank you both for being here, by the way, as we sit here just a few weeks before the end of the year. Carrie, I wanted to talk because we've been talking a lot about the tax laws and the One Big Beautiful Bill, the OBBBA, and I know that's a part of what we're going to talk about today, but the tax law did introduce a lot of changes that are going to start in January of 2026. So maybe you can try to give us what are the key charitable giving provisions that our investors and clients should be aware of as they're preparing for the end of 2025.
Yeah, and thank you for having me. So the tax law has really changed the landscape of charitable donations, and it has really made an impact on both taxpayers who itemize and those who do not itemize. So for instance, with taxpayers who do itemize, they've introduced a ceiling or a cap on the benefit of all itemized deductions for filers in that top 37% tax bracket. For everyone, they've introduced a floor of 0.5% of that year's adjusted gross income, or AGI, that needs to be met before a donation can even be deductible. Then for filers who do not itemize, they are allowing donations of up to $1,000 for individuals or $2,000 for married filing jointly of cash to public charities to be deducted above and beyond that standard deduction that's available.
Yeah. So Carrie, obviously there are a lot of numbers and figures that you had to run through and also talk to our clients and advisors about these changes. But I guess really the big question is, what are the implications then of these new laws and the changes that we'll go through from this year to next year?
Yeah, that's a great question. So these tax changes are really forcing clients to reevaluate their gifting strategies to ensure that they get the max amount of charitable deductions, say, over a span of years versus just within one tax year. So for the itemizers in that 37% tax bracket, with that ceiling on the benefit of all itemized deductions being reduced by 2/37, that means that prior $100 of itemized deductions would serve to reduce the tax payable by $37. Now, beginning in 2026, that same $100 of itemized deductions will only reduce the tax payable by $35. For that minimum threshold that needs to be met, really that means that for, say, a client in the $5 million AGI, they won't even begin to receive a tax deduction for their donations until they have actually exceeded $25,000 within that particular tax year.
Right. Yeah, and I mean, you gave the $100 amount as an example, but obviously we compound that to larger amounts. So many of our clients are donating some upwards of millions of dollars, so it could make a significant difference. Thanks, Carrie.
Yeah.
Andrea, so obviously there are a lot of changes that Carrie just went through. Given them, the question is, and you're talking to clients all the time, all day, how are you advising that they plan ahead? How should they be thinking about their strategies like donor advised funds, et cetera? What are you telling our clients about?
Okay, so you know what? It really is a brave new world, right? And Carrie and I were having a discussion earlier, and she used the word, it's not intuitive anymore. You really have to crunch the numbers every single year and see what's going. But I'd like to talk about 4 strategies that we think might help clients a little bit. Bunching, timing, accelerating, and then of course using a donor advised fund.
Right.
So bunching, I want to use Carrie's example from before. If you have a $5 million AGI and you have that $25,000 floor, right? If you give $25,000 a year for 5 years, you don't get any deductions. But if you bunch it and give $125 one time minus 25, you get a $100,000 deduction. So by bunching 5 years into one, you get a deduction where you wouldn't if you had not bunched. Timing is really interesting too, because let's say you are selling your business, right? And you have 1 year, you're going to sell your business. I'll put a big number out there, $100 million. Your floor is now $500,000. If you give $100,000 that year, it's all for naught. So you may want to wait and time it and do it later, like Carrie was saying, like look out a couple of years. A third thing is accelerating, right? So this change is going to come in January of 2026. So really, if you want to accelerate, there are about 40 days left in this year, right? If you have an AGI of, let's say, 2.5 and you give a $200,000 gift in 2025, there's no floor. You get the 37% deduction. You get a deduction about $75,000. You do it next year with the floor and the limited 35, your deduction's only $65,000. So you lost $10,000 deduction right there. And then all of these, the bunching, the timing, the accelerating, donor advised funds help facilitate you doing all of that. Donate now, decide later.
Yeah. It's great stuff, by the way, and I think those 4 points are very easy to remember. What you said bunching, timing, accelerating, and donor advised funds. Thanks, Andrea. Let's just wrap it up here with something I think tangible that, well, certainly everything we're doing here is tangible, but looking ahead, the question is, if in 5 years these rules stay in place, which theoretically they could, what should clients be thinking about, and advisors as well who are working with these clients, working with someone like a CPA or, obviously clients working with their advisors? Give us the importance of making sure that you as a charitable giver are doing it right and with the right people.
Right. Well, you know what? It's no longer a do-it-yourself. It really isn't.
It's too complicated now.
It's too complicated. So it's really putting together a team and cleaving to that team.
Okay.
Right. And the CPA is going to work with you, as Carrie said, to itemize versus standard deduction, right? Are you going to bunch? Are you going to time? Are you going to do cash, which is up to 60% of AGI deduction? Or are you going to do an appreciated security, which is only 30, but you get rid of the capital gains? But then, once you've worked that out with your CPA, you need to work with your FA and say, okay, I want to do cash. How do I raise it? Or I have cash. Or I want to do an appreciated security. Which one? Which lot? Right? But then, very important, it goes back to what I said originally as well, donor advised funds. Donate now, decide later. UBS has a robust platform. We have Fidelity, Impact Assets, NPT, which is National Philanthropic, which is the 4th largest donor advised fund on the street, and Renaissance. So you'd work with your FA to pick an appropriate vehicle donor advised fund.
Excellent. And experts like the two of you and the teams that you work with. So thank you both. This was really important, very educational, and I'm hoping that maybe it gives enough food for thought for people watching to pick up the phone and talk to their advisor and talk, of course, to their CPA separately. Thank you both, Carrie and Andrea. Great to see you. Thank you all for joining us. And just as a rule here, if you do have a conversation with your UBS financial advisor, UBS does not provide tax or legal advice, so make sure that you are having a separate conversation with your CPA. And for more information on everything coming out of UBS and lots of articles about this type of thing, you can visit ubs.com/views. Plus, you can check all of the UBS content out on social media. We're on LinkedIn, Facebook, and Instagram. Take a look at UBS Trending. Lots of content there for you to take a look at. And again, make sure that you are following up this episode by having a conversation with your financial advisor. Until next time, I'm Anthony Pastore. Have a great rest of your day, everyone, and remember to keep your eyes on what's trending. We'll see you soon.